Hi guys, I'm Jonathan, one of the directors at French United Capital. Some of you will follow us on our Instagram platform, and quite often it's difficult to get across all the data we want to say within the 60-second time frame. So this year we're going to bring you a slightly extended analysis. Myself will cover economic data for the week and what we got to look forward to in the week ahead, while my colleague Andrea will offer you her viewpoints on some movements in this week's equity markets.
Right, so what happened this week on an economic data front?
Yeah, well, it was a quiet start of the year with parts of the week still on holiday. The first real news of the week came with German retail sales, and despite it still being negative year on year, it was 2% better than forecasts, and that was good enough to see some impressive gains on the DAX. The flip side of this saw preliminary inflation at 5.7% in the Eurozone, producer prices up 24% year on year. The ECB looks intent to ride out the storm, and that could leave the DAX looking quite exposed.
Right, and anything interesting for the UK?
Yeah, Tuesday's consumer credit data was a surprise, almost doubling in November to 1.25 billion. This continues the trend we've been seeing throughout the last few months, where UK households really begin to struggle. Mortgage data was another release this week. That shows approvals down again, while overall lending was up. That's a bit of a surprise. We've mentioned how banks are basically tightening the lending, but it just goes to show that wealthier individuals are still more than happy to borrow at these rates. In turn, we can expect to see year-on-year house price index data looking to advance.
Right, so I guess that just leaves America to cover then.
Yeah, there's still a real gulf between economic data and market reaction and the economy as a whole in America. It's another week where there's just been really quite a little to be happy about. Construction spending data disappointed, along with December's manufacturing PMI numbers. 30-year mortgage rate was pushed 2 basis points, which left month-on-month factory orders as really the only positive data for the week. January job data is always a bit of a mystery and a bit of a guess, due to the fact that they do change the counting method to accommodate for temporary holiday staff. The US labour market will surely kind of form a lot of what will be in 2022. The December unemployment form of 3.9% is incredibly low, but on the flip side of that, we've got hourly earnings up once again, and also notably average hours worked falling, would again highlight real problems in the labour market within America. Powell's idea of full employment does appear to be coming nearer by the day though.
All right, so you've mentioned Powell, full employment. What about his price stability claims?
It's going to be a big week ahead, and certainly more clues are going to come. We've got CPI data this week, and we've also got the Fed's preferred mechanism of CPE data. Wednesday could be a real shock. CPI could creep above the 7% mark. That's a number that will leave the Fed really quite uncomfortable, and it's tough to see. They certainly wouldn't have expected the 7% mark when they were sticking to their stance of inflation being transitory.
So what would happen then?
Essentially it's going to be, we'd expect a lot of panic. The Fed's probably not a great place to be right now. Central banking over the last 2 years, especially in the States, has fundamentally changed, along with administration policy in general. Precedent has been set to use words rather than actual policy. We've heard for 18 months now about how the spending bill has been propping markets, and yet actually very little of that money has so far made it through Congress. you'd pretty much expect words to continue to be used, certainly to try and dampen overheated markets. So you can expect press conferences to increase in frequency. You'll hear a lot of the Fed speaking, and the tone will very much be how we can expect rate increases sooner rather than later.
Right. So I guess words rather than policy then, huh?
Well, I see it's creeping nearer and nearer towards a rate increase, but when we're looking at, already the Bank of England has gone 15 basis points. It's more of a token gesture than anything else. It's maybe not so easy in the States. It's going to be a very much a last resort. The economy isn't in a great place, despite the equity markets at all-time highs or within touching distance of all-time highs. The real problem in the States is your zombie companies. Now, this is companies which already at historic low rates can't service their own debt. There's currently more than 600 of them companies. And between them, they carry 3 trillion of debt. A 25 basis point increase in rates in the States would not only force many of these companies insolvent, but it would add another 250 publicly traded companies to the zombie list. We've kind of been prepared to this point for rate increases around March. Personally, I don't see that coming. It would be a real stress on a very fragile economy.
Right, so anything else of interest?
Well, it's not so much something in the last week, but it has been a trend over kind of the last 3 weeks, or certainly from the later part of 2021. Treasury yields have been jumping. I think we're up 0.5% over the last 3 weeks to currently around about 1.7%. And obviously that's going to add significant downward pressure to your equity markets.
Yep.
We can talk about market bubbles another time, but there's already signs of concern among investors, especially in your more speculative investments. If we take ARC's flagship fund, that's now down 50%. It's lost half its value. SPAC indexes are down 35% from the highs. This week alone, biotech has just suffered its worst week in a year. And of course, we've got, looking at cryptocurrency markets, Bitcoin's come back now 40% from its previous highs. The tough bit going ahead is when your growth stocks struggle, you see capital rotation into your value stocks. That's not so easy right now for investors because you've got your value stocks also trading at all-time highs. It's tricky to see where investors might place their money right now. I think you could be looking at temporary inflows towards your commodity markets.
Right, okay.
So there's always going to be a lot to talk about with equity markets, and I guess it's a company that grabs most of the headlines. So there's only one place to start this week, and that's with car manufacturers.
Right, so lots of car data in, and some impressive gains in the EV market. European car market increased 1%, first annual gain for some time. While petrol engines aren't losing any market share, EV is quickly eating into diesel engine sales. Tesla, of course, declared record quarterly deliveries, although the 60,000 units is taken into caution due to Asian pull forwards before January subsidy cuts. Elsewhere, BMW outsold rivals in the US luxury car market. And for the third consecutive quarters, and deliveries jumped 20%. BMW stock performance seems priced in, and we are neutral across most manufacturers. The one that continues to impress with both ICE and EV performance is Renault. Focus will remain on mid-size and compact launches, and we are looking to asset price of €38 year end.
So we've had some serious downward pressure on the Nasdaq this week. There's been some notable losses. In particular, we've got DocuSign has suffered, T-Mobile US has suffered, and Mercado Libre has had a pretty rough week. What are you thinking?
So we've previously held DocuSign and since sold off, not alone with ARC, also selling out recently. It has to be avoided with class action lawsuits beginning. T-Mobile has been on our radar for a while now, but last week's preliminary Q4s don't instill confidence. The stock's been trading below its 200-day moving average since September. It will move to a buy territory, but not just yet. Now, Mercado had a tough week, led by some high-profile price downgrades. That said, option volume jumped considerably late Friday, with most actively traded $1,300 for February end. Mercado would be a buy at some point.
Yep, so that's covered the Nasdaq losers, but of course there's been Nasdaq gainers at the same time. Pinduoduo and Peloton having really good weeks.
Right, so Pinduo earnings are still way out at March 16th, but we expect gross margins stabilizing and full-year EPS jumping to $4.50. We've picked up the stock this week, along with call options at $56. It's tough to be so positive with Peloton. Asset price gains appear to be on unconfirmed rumours of a buyout. We continue to be bearish with concern of a sustainable business model.
I think we should have a quick chat about Carnival. It's obviously had a pretty rough time, not the best market conditions. But again, this week we've seen an announcement of yet more operations suspended or paused until March 7th now.
It actually didn't suffer too much and is still up over the last trading month. It's tough to see the positive sentiment though. 20 billion of debt added since 2019. Even a trouble-free 2022 would still have revenues below 2018 levels. Hugely exposed to any rate increase, and we are short in the belief it's currently 40% overvalued.
Yeah, so a little bit more of a look at the UK. It's been a good week for miners, especially, and also financials, while home builders have really had a bit of a rough week. Is there any surprises there?
UK miners continue to behave erratically, with Rio Tinto really struggling over 12 months, while Anglo-American has thrived. On the whole, miners should see a positive 2022 for reasons you've touched on your economic review. No surprises with house builders. We consider them all overpriced, and that's the pattern with UK equities in general. Brexit regulatory impacts will come thick and fast in 2022, and all of them with negative impacts. Right, so I think that covers everything for this week on equities.
Thanks, Andrea. Well, I hope you guys have found this useful, and like I say, we hope to bring you this each week as a bit more of an in-depth look into what's happened over the markets. I think it's the YouTube way to, like, subscribe, whatever it is that
Activate
YouTube does.
the notification bell button.
Yeah. And of course, we want you guys to get involved. If there's anything you kind of want us to kind of touch on or cover in next week, please feel free to leave a comment, get in touch, something like that.
Yeah.
Wishing everyone a prosperous week. Thanks.
Thank you.